Joining us now as our featured guest is Peter Schiff, president of Euro-Pacific Capital. Peter, very good to have you here once again.
Nice to be here again.
And of course, the world has changed quite a bit since you and I talked last. You had been warning for quite some time that we were going to see problems, and indeed we are now. I want to start with that consumer confidence number. 38 is the reading. And it's the worst in 4 decades since records began. When you see a number like that, what does that tell you about where our economy is headed next?
Well, I mean, first of all, consumers losing confidence makes a lot of sense. I mean, it's actually a good thing, and these numbers are going to get a lot lower in the years ahead. I mean, we'll probably get down to 10, maybe below that number. But, you know, the problem in the past is consumers were overconfident, and all that false confidence is one of the things that led consumers to make a lot of irrational decisions, like not to save any money, to go out and borrow a lot of money that they really couldn't repay, and to buy things that they couldn't afford. And now that consumers are taking a more realistic outlook, although they're still not pessimistic enough, hopefully they'll rein in their reckless spending and actually start saving money again, which is what we really need.
Although, of course, consumers weren't the only ones spending. The U.S. government has been on a bit of a spending spree. And today, the U.S. Treasury's acting Undersecretary Anthony Ryan saying there will be unprecedented financing needs in 2009.
That's unfortunate, because even as consumers start doing the right thing, their government is doing the wrong thing. As Americans stop spending money, the government is spending even more, either directly on its own, or it's encouraging citizens to spend more money with their reckless stimulus packages. But all of this extra spending, of course, is financed through inflation. We don't have any money, we're broke, and all we can do is spend the money that we print. Now, we can try to con the rest of the world into loaning us money that we can spend, but the world right now is suffering as a result of all the money they've already loaned us that we can't pay back. So to expect the world to loan us any more kind of seems to be a big jump.
But wait, when you say we're broke, what do you mean exactly? If we're making payments, we're not broke.
Well, we're not really making payments. We're printing money. I mean, the U.S. economy is broke. We've borrowed trillions of dollars, right? And we used all that money to finance consumption. So we don't have anything to show for it. We don't have real factories. We didn't take the money that the Japanese and the Saudis loaned us and build factories so that now we can actually export products to pay back that debt. We spent all the money on television sets, on SUVs, on remodeling our kitchens. The money's gone. We can't pay it back. That's why all these entities are collapsing. That's why Wall Street is in so much trouble, because they engineered all these loans that have now gone bad.
You saw this crisis coming, as we pointed out earlier. What were the early warnings to you that we were going to be dealing with a very large problem?
Well, I saw this early on. I mean, basically, going back to 2002, 2003 is when I really started sounding the alarm bells. When I saw the extent to which the Federal Reserve was going to try to prevent the recession that we should have had following the bursting of the NASDAQ bubble, following September 11th, when I saw them irresponsibly lowering interest rates, and I saw the housing bubble forming, and I saw them throwing lending standards out the window, and I saw how much money we were borrowing, I began, going on television and writing about what the dire consequences were going to be when this bubble finally burst.
It's widely expected the Federal Reserve this week again will lower interest rates. Would that be a reckless move in your view?
Of course. I mean, rates are already much too low. What we need in the United States is much higher interest rates to both discourage borrowing and to reward savings. But of course, higher interest rates will, cause the recession, right, to unfold quicker. And the politicians don't want that. They're trying to keep the recession away, but the recession is actually the medicine that is going to cure the economy from the disease that infected it during the boom. But, the politicians don't want the recession to run its course. They want to pretend that there's some way that they can print some money or pass a program and make the recession go away. They can't do that. I mean, it didn't work in 2001 and 2002 because now we have this huge mess on our hands because the government didn't stay out of the market back then.
Iceland's central bank raised its key lending rate to 18% today.
Yeah, look, that's what's going to happen to the United States. We're going to be hit by the same forces when the world yanks money away from us. Right now, it's kind of perverse, but the dollar has actually been a major beneficiary as this crisis has unfolded so far. And so our markets are actually being supported, our economy is being supported by all this deleveraging. As everybody is selling a lot of assets that they own around the world, they're moving into the dollar. This is a fake move. This is not going to last. once this deleveraging ends, the dollar is just going to collapse like a stone. And when that happens, that's going to pull the rug out from under our economy and our markets.
You sort of threw a lot of ideas out, Peter, right at the start when we began talking. I want to backtrack a little bit and talk about the big government bailout plan to save the banks. Do you think the whole approach was wrong, that not only should Bear Stearns have failed, but Lehman should have failed, and those should not have been the only ones?
Well, sure. Well, Lehman did fail, but I think many of the brokerage firms that are now alive, including even Goldman Sachs and Morgan Stanley and many of the banks like Citibank, a lot of these companies would have failed, most likely, had the government not stepped up. And I think failure would have been better than propping them up. You know, the same thing happens, is true with the auto companies. I mean, why are we propping up these companies? If they're going to fail, let them fail. They were mismanaged. And when the government props them up, all they do is entrench the very bad management that bankrupted these companies in the first place. If you let them fail, if we let all these banks and brokerage firms fail, it doesn't mean that there won't be a brokerage industry or a banking industry. It just means that it will come under new management. The people that ran these companies into the ground will lose their jobs. Somebody will step up in bankruptcy and buy up the assets and do a much better job of running the businesses.
What about the argument, and certainly people said it with Lehman, people said Lehman should have been saved, that the counterparty risk is too great, and that's why we had to see the government make the moves.
No, look, I agree there's a lot of counterparty risk, but, we've just got to let it work its way through the system, because people forget about all the bigger problems that the government creates when they try to solve a problem. Just because something is going to be painful doesn't mean that we have to resist it. We have to look at the consequences of government action. And remember, the government doesn't have this slush fund of foreign reserves to fund this bailout. The bailout is either coming from borrowing additional money or printing money, and it's creating a bigger problem. And you're taking all the losses away from the shareholders and the managers who really created these losses, and you're putting them on the backs of American citizens, or citizens all around the world who own U.S. dollars, who have U.S. dollar-denominated debt, or Americans who are earning dollars for wages, because our money is going to lose value.
And remember, it was just this morning, a short time ago, that the Treasury's Anthony Ryan said the government is facing some unprecedented financing needs. Let's listen into his comments.
This year's financing needs will be unprecedented, and we firmly believe that investors value greatly and pay a premium for Treasury's predictable actions, the certainty of supply, and the liquidity in the Treasury market. To the very best of our ability, we intend to stay the course.
What about that argument? That investors will pay because there's liquidity, there's supply, it is the U.S. government backing.
They won't.
Here.
In fact, the very reason that nobody should want to own treasuries is because there's all this liquidity, because there's all this supply. That's the problem. The supply is going to keep growing, which is going to ultimately collapse the price. When you're investing in something, you want it to be scarce. And if you look at the plans that the government is laying out right now, my guess is that we're probably going to borrow another $10 trillion over the next 4 or 5 years to finance budget deficits, to finance bailouts and stimulus plans. Who's going to want to loan us that money? And I would put the words loans in quotes, because if the world actually loans us the $10 trillion, it's not a loan, it's a gift. We cannot pay any of this money back. We are spending the money.
Okay, wait a minute. We can't pay it back now, but do you not have faith in the U.S. economy that we will be able to generate or produce again?
No. How can we do it? The money is not being, we're spending the money. Every day more factories shut down. We can never pay it back. It's like an individual. If an individual keeps borrowing money on credit cards to buy things, to take vacations, to buy products, how's he ever going to pay that back? If you don't have the income to pay it back, if a business borrows to make an investment, you can see, okay, they can pay the loan back out of the returns from the investment. But our government is borrowing money and spending it. Our citizens are borrowing money and spending it. All we're doing is digging ourselves into a bigger hole, and the more money the world loans us now, the more money they're going to have to loan us in the future. They have to continuously loan us more and more money and never ask for it back. And that's how we knew this credit bubble was going to burst. Our whole economy was built on consumer credit. And once the credit stops flowing, the whole economy collapses.
We're back with our featured guest, Peter Schiff, president of Euro-Pacific Capital. Peter, you've been very vocal about what some of the problems are with the government's plan, where the U.S. economy is going. What about the fact that come January there will be a new administration in the White House? Do you have any sense of optimism that there might be some change?
None whatsoever. I mean, there